Hi, how are you? My name is Nyakwaka. I'm a financial analyst and a full-time forex trader. Welcome back to my YouTube channel. In case you're new here, please don't forget to press that subscription button and knock that notification bell to get notified each time I'll be dropping a new video. So welcome. Earlier on in our two videos, we talked about introduction to forex trading, uh, two major types of uh, forex analysis, different types of currencies. We say that we have major currencies, minor currencies, and exotic currencies. We talked about currency pairs, major and minor currency pairs. We went ahead and discussed what fundamental analysis is. We said fundamental analysis, these fundamental factors, or rather economic factors, political, social political, geopolitical factors that affect currency price or currency values in the financial market. And technical analysis, this is the study of price movements in the chart. And we said we have three major types of charts. We have line chart, bar chart, and line chart. We said line chart is made up of closing prices that have been joined by a line to form a line chart. Bar chart and candlestick chart, they more or less have the same structure because they have a wick, or you can say shadow. They have body and uh, they have body, and you can tell by the difference between the opening and the closing price, and you can easily tell which side is dominating over the financial market. And I told you that candlestick chart is important because it has got it tells us so many information as compared to the two charts. The reason being, when you look at the bodies of candlestick being formed, it tells you what kind of pressure is in the market. You can tell whether buyers or sellers are dominating the market, whether there is indecision in the market, or whether there is a possible reversal in the market. So today, proposed reversal in the market, we went ahead and discussed about support and resistance. I told you support is that point where the price fails to drop below, and resistance is that point where the price fails to break above. And we have two major ways of trading support and resistance. One, we have trading a break, and two, we have trading a bounce. I'm going to start with trading a break. A break. So, from the word break, it means simply buy when the currency breaks above resistance, the previous resistance zone, and sell when the price breaks below the previous support zone. So rather, you can see here the price is on an uptrend, making higher highs and lower highs, higher highs, lower highs, higher highs, lower highs. You can see here we have our previous resistance zone. Here you can see at this point the price has broken above our previous resistance zone. So at this particular point, when it breaks above our previous resistance zone, you execute a going long order, or you can execute a buying order. When the price is making lower lows and higher lows, making lower lows and higher lows, lower lows, higher lows, lower lows, higher lows, lower lows, higher lows. You can see here we have our support zone. The price has broken our support zone at that point. So you enter a going short order at that point. You execute a selling order, order at that point. And we have two ways of executing orders in the market. We have one, executing orders conservatively and aggressively. We have trading aggressively and trading conservatively. We have trading conservatively and trading uh, aggressively. So we have two major types of traders. There are those who trade conservatively and there are those who trade aggressively. So I'm going to start with those who trade conservatively. So remember, when the price is making higher highs and lower highs, higher highs, lower highs, higher highs, lower highs, higher highs, lower highs. So you'd want to wait until the price make that retrace a bit. Let's say, for example, the price has formed up to that point. This is our resistance zone. The price comes up on a bullish trend and it breaks above our previous resistance zone. So you want to wait until the price falls up to that point, or it gives you what we call a retrace, is when you execute a going long order at that point. So that way you'll be trading conservatively. And trading aggressively, the same way happens on a downtrend. When the price is making lower highs and lower lows, when the price is making lower lows and lower highs, lower lows. So you can see here we have our support zone. The price has broken below our previous support zone. You'd want to wait until the price comes and retraces up to that point, or retraces to a point whereby you can easily get confirmation that the price is now ready to go short. Is when you execute your going short order. So you'd want to wait for a confirmation. The price goes up and down, it retraces. When you wait until it retraces is when you execute a going short order at that point. And trading aggressively is just the direct inverse of trading conservatively. So this is trading aggressively. So this is trading aggressively. So trading aggressively, let's say for example the price is making higher highs, lower highs, and then it has broken our previous resistance zone. Immediately it breaks your previous resistance zone, and it closes above the previous resistance zone. You execute your buying order without waiting for retrace. So the price will come, retrace at that point, and then it will start going up. The same happens to downtrend. When the price is making lower lows and lower highs, when the price is making lower lows and lower highs, lower lows, you can see here the price has broken below our previous support zone. So the moment it closes, the moment the candlestick closes below the previous support zone, you immediately enter a sell order. Between trading conservatively and trading aggressively, which one is important? I would suggest that you trade conservatively, because sometimes the market would break above support and resistance zone, but the moment it will break above the previous support and resistance zone, and then it retraces and goes it reverses back. Remember, the financial market is never ever regular. Let's say for example the market is making higher highs, lower highs. The market has broken above our previous resistance zone, and then it behaves funnily. So if you are trading aggressively, let's say for example you have entered a buying order at this point, you have bought the currency at that point, and then a few moments later you see the market retrace, make a reversing. So it is always recommended you trade conservatively. You wait until the price retraces, gives you a confirmation that it is now ready to go on that particular direction you are waiting the price to go at, is when you enter either going short or going long order. Secondly, we're going to discuss trading a bounce. So trading a bounce, just from the word bounce, this means that price bounces back from this zone, support and resistance zone. So in trading a bounce, you sell when the price is approaching resistance zone, and you buy when the price is approaching support zone. So remember, we said that at resistance zone is where we have surplus At the resistance zone is where we have surplus sellers, and at support area is where we have surplus buyers. You have to note that. So we have said we have trading a bounce and trading a break. Trading, you sell when the price breaks below support area, and you buy when the price breaks above resistant area. And trading a bounce, you buy when the price is approaching support area, and you sell when the price is approaching resistant area. So today in this video, just from the topic you've seen, today we are going to discuss about trend lines. We are going to discuss about trend lines. So in case you have any question, you just drop your comment in the comment section and we'll just go through it and I'll just give you your clarification. So today we're going to talk about trend lines. Today, trend lines. So what is a trend line? Trend line, these are easily recognizable lines that traders draw on charts to connect a series of prices together or show some data's best fit. So those are trend line. And how do you draw a trend line on either an uptrend or a downtrend? How do you draw a trend line on a downtrend or an uptrend? So remember, remember on the chart we have the resistance zones and we have support, resistance, support, resistance, support, resistance. So in an uptrend, you draw your trend line below easily identifiable support areas. You draw your trend line below easily identifiable support areas. In that, when the price breaks our trend line downwards, it gives us a confirmation, or rather signal, to show that the price is ready for a reversal. This action is called break of structure. The action of the price breaking below our trend line is called break of structure. Just trade trend lines alone. You combine trend lines with other indicators or as well other analysis. Let's say, for example, you've studied candlestick formation and candlestick structures, and you're now certain that the price has broken our structure. We have, let's say, for example, you have bullish engulfing, no, you have a bearish engulfing candlestick, or we have candlesticks with upper longer wicks. So when, okay, let us find where the chart is on an uptrend. Now you can easily identify the support areas. Yeah, that's, for example, here this is a MetaTrader 4. And how do you find a trend line on MetaTrader 4? We have these symbols here. You click on those symbols and then you go to this slanting line, that zone. Sorry. And then we want to put our trend line very easily identifiable. Okay, we take our trend line all the way up to that point. Sorry, I'm using MetaTrader 4 on a mobile phone, so just bear with me. So when you want to draw trend line, easily identifiable support areas, in that when the price passes our zones. Yeah. So as you can see on the chart here, we have this zone, we have this zone, we have this zone, we have this zone. So the price, you draw a trend line below easily identifiable support areas, in that when the price passes this zone, see the price passed as closed below our trend line, giving us a signal that there is a possible reversal. And then you wait for the candlestick to confirm to you that now what is coming up is a reversal. We have another structure here. We have a double top. When a double top appears, it signals reversal. So that's how you draw a trend line on an on an uptrend. So what gives you a confirmation that that particular trend is on an uptrend? It takes two zones to draw a trend line, and it takes the third one to confirm that the trend is on an uptrend. It takes two support zone to draw a trend line, like this zone, and you have that zone to draw a trend line, and it takes the third one to confirm to us that the trend was on an uptrend. And then when the price closes below our trend line, we wait until it gives us confirmation. Here the confirmations we have are, you can see candlesticks with that portrays small bodies, or you can say spinning tops, and we have a double top candlestick structure. So when a double top appears and you can see there are so many spinning tops, there is a price rejection. So price rejection, and then you see the price came all the way down, sold up to that point. So that's how you draw your trend line on an uptrend. And on a downtrend, so on a downtrend, you draw your trend line above easily identifiable resistant areas at that area. This is our trend line. In that, when the price breaks above our trend line going upwards, we wait for confirmation to give us, it gives us a signal that the price is ready for a reversal upwards. So simply that's how we draw our trend line. On a downtrend, you draw your trend line above easily identifiable resistant areas, in that when the price breaks above our trend line, it breaks above a trend line, that's what we call a break of structure, and then we wait for a confirmation that the price is going to be on an uptrend. On an uptrend, you draw your trend line below easily identifiable support areas. When the price breaks below our trend line, that gives us a signal that there might be a possible reversal. So you wait for confirmation. One of the confirmations we have things like spinning tops. You can look at we have spinning tops, we have things like bullish engulfing candles, no, bearish engulfing candlesticks, sorry, and we have double top, double bottom, break of structures. So that's all about trend lines, and in our next lesson we're going to talk about trend channels. So in case you're new here, please don't hesitate to smash for me that subscription button and knock that notification bell to get notified every moment I'll be dropping a new video. You will be notified. So stay tuned, and in case you have any question, just drop the comment section, and I'll answer you and give you a clarification on what you have not understood.